What's going on, traders? Hope everybody's having a great weekend. Wanted to do an updated video here on the futures markets, the E-mini S&P futures, ES, as well as the NASDAQ 100 NQ. Going to be taking a look at some longer term charts, some weekly charts, some daily charts, as well as some other ancillary data points that we like to look at to help us formulate a game plan for the upcoming week and some things that we could potentially expect to see in the markets. Of course, this video is for educational and entertainment purposes only and should not be viewed as financial advice. If this is your first time joining the channel, don't forget to subscribe, hit that like button, and be sure to share the video if you please. It means a lot to me. But before we get into the charts, why don't we take a look at the economic calendar? Also, earnings are starting off. We had JP Morgan, BlackRock, and a few of the banks starting off our earnings season. And as we get a little bit closer to the big tech names, I'll start looking at that calendar as well, but we're not quite there yet. We usually wait for Netflix. That really kicks off the tech side of the earnings season cycle. All right, let's see what we have. We had CPI last week. Let's see what we have in store for this upcoming week and see if there are any things that we want to pay attention to as far as data is concerned. All right, let's see here. Nothing really on Monday, Tuesday, nothing really too interesting. Wednesday, nope. We do have Cleveland Fed President Hammack speaking at 12, so I guess we'll pay attention to that. U.S. retail sales, not really a market mover, but we'll watch those numbers. Thursday, April 17th, initial jobless claims coming in at 8:30. And then that's really about it. 8 o'clock in the morning before the markets open on Friday. Fed President Daly speaking, but looks like a quiet week for us, so that is good. All right, now let's just take a broader view here and look at the monthly chart. As I was talking about this earlier, and really, what had gone on here, and it's really kind of no surprise where we have found a potential bottom in the markets, right? We're looking, if we're going to count this here as our swing low, and kind of we'd already been over this, but I want to do it one more time. Had our higher high, higher low, right? Higher high, higher low. So what was really happening here, right? This still could be just a monthly higher low being put in as far as the longer term trend sequence. And really look where we stopped, right? Right in the highs of back in 2022. Okay, so this is a good sign that we actually ended up finding buyers there overall, because if this really, that getting over that high was really what started to shift, right? We were watching this, I remember back in 2023, we were watching for this potential monthly cup and handle setting up here, and that is, as a matter of fact, what we did get. And when we broke over this previous high, that gave us the break of structure, and here we saw the measured move back up into basically a monthly triple top right up here, up in that 61-65 area, where then we ended up rolling over, right? And we saw we had this balance level that we were watching breaking down, right, if you recall, and here we are now. So we are still below that monthly 20, or excuse me, that monthly 9 at 56.74. So still a ways to go, about 300 points, a little bit more than that to recapture that. However, it looks like we are going to close the monthly. It's sitting just above the 20 period moving average right now. That's at 53.84. That 5300 is going to be really important as we get down a little bit more granular. So either way, I just wanted to put that in context once again, because I think that that is important. Although I will say, being underneath the monthly 9, haven't seen that in a while. So that is certainly something worth noting. Okay, what a retracement here on the 90-day pause information that we got out from the White House. Huge rally, 10% move day on that news. And really, we were looking at that put call ratio. We were looking how extended VIX was. And the Bulls just needed a little spark to catch those bears off sides. And we've often talked about this in these downtrends, these counter trend moves. Now, obviously, this is a very kind of news driven cycle as far as what's driving price with the policies coming out from the White House. But with that being said, bear markets still, or downtrends I should say, still act within the same way as in when things get extended. You see that snapback, you can catch the bears off sides, and you can get really outsized moves to the upside as well. So here we are having basically, we didn't get to the manipulation highs, but we're almost at the previous week's highs, almost there, about what probably retraced, at least from the highest it ever went, basically into the lows of the week of March 10th. So you can have that right there. So that is certainly interesting, and no surprise really that it's kind of stopping in this general area. You can see here also the week from July 7th kind of double bottoming around that, and now we've come up, retested, manipulated a little bit higher, and kind of come back down. But here still on the weekly, still under, as far as momentum is concerned, still under the 9, 20, and 50 period moving average. So that certainly will be noted. And we spoke about too how extended the price action has gotten from those moving averages, and usually that's not where you want to be entering new shorts or anything like that. You just have to be extra cautious because price is either going to need to move sideways and up, or you're going to get these short cover squeezes, and that also gives the longer term moving averages chances to catch up there and get a little bit more aligned with price. But as far as right now, still the weekly 9 up basically just over 5,600, sitting at 5616 currently. So still a ways to go for that to catch up. Now, after, of course, we just had this huge move to the upside, I still kind of would be in that camp of potential consolidation coming back and forth, and we could even print here probably double inside weeks or triple inside weeks if we're counting the week of the March 31st, and now we're going to obviously start a new one here. And it really would not surprise me. And you guys got to be careful, of course. These are huge ranges that we are playing with right now. Obviously with VIX being so elevated, but I still wouldn't be surprised, if we put in a candle that looked very similar to that. And what could that potentially be setting up? Well, maybe a weekly bear flag. I think that certainly the longer, if we're not able to, if we're not able to recapture this prior breakdown, right, and start seeing price trade up over 5,600, it's going to be a little bit tough for the bulls. And of course, we have already been talking about those weekly lows from January 13th as well. And, we kind of hit them here in the week of the 24th. Obviously, no acceptance in that area, but now we're certainly getting some decent areas of where we've seen price react in that general zone. So I'm going to be obviously continuing to watch that. But either way, let's see what happens here. But I wouldn't, like I said, be surprised if we see 3 inside weeks printing overall. Okay, let's get into our chart, or some of these levels that we already have drawn out on our weekly chart, and see if there's anything that we can take away from these levels that we have been watching. Right, we did trade a little bit into this gap. Really no acceptance over it. We did moderately close, and this is one of the things I wanted to watch. We've got the weekly high from, what is this, August 5th, and the weekly low from September 2nd. Priced closing just marginally over it. I don't know. I don't know if I'd personally count that as acceptance over that level. So I definitely want to pay attention to see if we start breaking back under 50, yeah, 53, 87, 85. That could open the door for a little bit more of a retracement down lower. We're going to definitely pay attention to these highs up here in the 53.20s. That is definitely still important, and a day trading level I know as well that I have been watching. So have some more confirmation here just looking at this weekly, even here now in my own mind, because I did not even notice this, of intraday, how that 53.20 is, certainly interesting to pay attention to for a pivot. Okay, so what do I need to see here for the bulls on that weekly time frame? Well, really, I need to see some price action close up in the highs of last week's range, right? We start seeing price close here between 5,500. Really got to hold over that, like I said, that 53.85, 53.87. But if we see price hang out over here, I would feel a bit more confident then about that potential upside move for a further retracement. We'll have to also pay attention to how those moving averages end up playing right now. Let's see, it's at 56. The weekly nines at 56.15 thereabouts. So it's probably just around in this area here, and that might give it a little bit more time. If we do consolidate and see a little bit of a rest, this would probably start to move down very slowly. But I think holding that 53.85, that would be conducive for the bulls. Breaking under doesn't mean the game is over. They can still retrace into 5300. That definitely needs to hold, but so I'd also watch out for some manipulation potentially in that area of some fake breaks, but we'll see if we do catch a sell, how that area ends up reacting for the bulls. That being said, I think under that 5,300, it's very likely we'll trade a bit lower, maybe into the weekly lows from, what is this, May 27th. Almost probably 100 points down. I don't really see at least that much more on the weekly. Maybe 52.40 here could be another potential spot, but I only have one touch there, so I don't really have too much more data. Let's get a little bit more granular and go into our daily chart and see if there's anything more that we can discern. Let me just say, okay, we went over both sides here for the bulls and the bears on the weekly. Okay, that's fine. Let's break it down even more. Come into our our daily chart. One more thing I wanted to say about the weekly. Still monitoring this -11 oversold reading, but we haven't seen a green shift in the momentum there, so I'll be paying attention to that. But on the daily, definitely coming out of that overbought, right? This is what I really want to see on the weekly as well. But this is a good sign now, starting to shift out of that oversold reading. Still -8.8, but rising and turning green, so that is good. And here I'm still looking at some weekly levels just to see if there's anything else on the daily that I can discern here. I will say that 5,200 here I think is worth paying attention to. So let's throw that out there. Not only psychological, but I have Another touch. And really, from this view, what I'd like to point out, and we're going to go into the daily chart here in a moment. You know, breaking over these highs of the 7th and the 8th, it's going to be so key. And that's why I was talking about that 5,300. Okay, it can sweep down a little bit lower. The high from the 7th was 52.86, and the high from the 8th is basically 53.05. So give it about 15 points there, about a little zone that I think is very important to pay attention to, because over these equal highs basically is what now has shifted the market from that daily perspective up higher here. And could this be setting up? Could this be setting up a little bit of a shift here? Yeah, you could look at it this way. Maybe for us to rattle around in this area before making a real attempt. But that 5,300, so I'll be paying attention to that, as I mentioned earlier. But let's open up the daily chart here that we have been working with. And from this perspective, here again at the 52.07, and we were just already talking about that 5,200 earlier. So nice confluence there. Here's that daily level for the 5,300, and I don't actually have. I have this down to 77. I must have gotten that somewhere. However, I feel like it's a little bit more pertinent at the current moment to be up in the 80s. And what's the actual high here? Is 86. Oh, I have it at 83. There we go. Okay, so I have a little demand zone there to pay attention to. All right, but hold over this 53.82 from the daily perspective. Okay, all is well. We would want to see consolidation over that, then a push over 54.30. Getting over that, I think we can come back up into 54.50, 54.48 area, and then we'll go ahead and attack these highs, right? This is where we had that issue a few times now, where we pretty much topped on that huge rally, and then the next day we did try to get higher, broke over 5,500, but stopped at that 55.30 and was unable. That's kind of when we retraced a lot of this move. Bulls came back on Friday, but again, now look at this, inside bar, so be careful on that front. So kind of mentioned here, got to really get over the 50, see acceptance over 55.30. But like I said, if we start seeing some daily closes over 54.30, that would be the first step. And then we can look at the 54.80, the figure at 5,500, and then the final step over 55.30. So what about the bears, right? from the daily. Let's see. They want to see price push back under 53.80. I think that would be good. And then they would probably attack the midpoint here. I do not have a level on this current chart, but I would say 53.40 next. Underneath 53.40, taking us down to 5,300. That big area of demand I just said. If the bears are able to get under and see some closes under 5,300, under that 52.86 area, well, that's really going to start to neutralize whatever trend or potential bottom has been put in, or short-term bottom, I should say, because we obviously don't know the weekly charts still have damage on them. But as I was mentioning, closing under that 5,300, 52.87, or even if we're seeing the day trading underneath there as being such a big daily level, watch out. We could sell back down. It wouldn't be too hard for us to get down with pit stops along the way, potentially back down into the same lows as Friday at that 5,200. So I would watch out for that. And certainly if we break under 5,200, 51.75, 77, under that, back down another 25 points or so, taking us into 51.49.50 area. And yeah, if we break under the low from the 10th, well, that's really going to be bad. And then watch just for the figure at 5,100, and then probably eventually it could bounce, but at that point, the whatever trend that the bulls are trying to establish now would be totally negated. You know, we'd probably trade in this area and then finally come down and attack the lows again. So that's probably what we would end up seeing. So path for the bulls, right? And that path for the bears. Maybe we bounce here. This is all obviously conjecture, but so we'll see. Like I said, maybe the news is on edge. I think some news did come out this afternoon on Saturday about what things from China are going to be excluded. And it looked like positive news. So we'll see what Globex opens up with. But either way, I still would be careful for this. Chop sideways. A couple more inside days, right? We're going to either have to break daily highs or lows to start to search for next swing points. Bulls, though, I will say, over the daily 9. I haven't seen that in a while. It's sitting at 53.75, so about 25 points above that. The 20 sitting right around my level, 55.06. And we got the 50 all the way up at 5,700, basically 57.20. So, of ways to go for that one. All right, let's get into some day trading levels. Okay. Let's get a little bit less candles. All right. Okay, bulls really got to hold over this shift in structure. You can see here we kind of did a bit of a ascending triangle. Right, on Friday. It was very choppy in the morning. Oh, this was Friday, excuse me. It was very choppy in the morning, but overall, over the last 2 sessions, really put in the swing low, higher low, higher low, higher low. Then we came to this. Broke market structure here over these highs, so we do have a good shift in that bullish market structure changing. And for me, as long as we hold the highs, right, of this breakout, 53, 55, 53, 60, 53, 54, in that area, looks like, this hourly bull flag, a little spicy on our overbought, showing a positive 10.2. It'd be nice to see a retest here. We'll see what the bulls are made of. Then maybe we can look for a long back up into these equal highs once again. But if we really get over that 5,400, 5,425, next big level, right? We get over that 5,450, you see around there, right here, into these lows. Okay, for the bears, breaking back under this previous shift in market structure, under 53.55. Okay, we probably retrace back down 53.20. Now we were talking about that on the daily chart. Okay, that 53.20 area important also, and you can see how many times we did also, break above but could not confirm on that hourly multiple times. So also important daily level, and you can see here the big shift, that big momentum displacement that we got to the downside, when in fact that was broken with the strong sell there. So I think breaking back under this market structure shift, then breaking under 53.20, bulls can then go ahead and target 5,300. We already talked about that area, how important it was. So remember, we said down to 86 on the daily. So maybe I'm actually going to mark that off as well here on my day trading chart, just to have it. I also have a level here, 72. But I just want to be cognizant of this because we did to speak about it on the daily chart. Right, but under 52.70, probably can see some quick flashes. You can see we did have a hard time accepting on the hourly underneath that level. But if we do find acceptance, probably trade back into these 3 o'clock lows from Thursday, 52.30, 52.35, breaking under that. I'll see you back down 5,200 even. There we go. We have a path for the bulls and the bears on my day trading levels. So there we go. All right, let's get into a daily chart now and start to look at NQ. I'm going to go over the monthly chart for NQ. All right, we'll skip it. Okay. Very similar story. You can see kind of where we found that bid. TEP making a bit of a stronger push, I would say. Still no momentum shift here. Negative 11, still oversold, but oversold nevertheless. But this weekly candle got a little bit closer to this high here, regardless of the manipulation wick. So that is interesting. However, still, I have to think if I updated my NQ levels. I'm not sure that I did, actually. For day trading, at least. Still underneath this previous bear flag balance breakdown. So until that happens, it's going to be tough. Tough for me to get too bullish, in the sense that we're starting to really neutralize this trend. The weekly high, 19.3, well, I'm going to call it 19.390. Okay, so bulls need to start to see some weekly closes over that. And then potentially we can talk about the lows, the weekly lows from back in November. Okay. which is around 19,950, 955. And over that, back to the weekly highs of the week of March 24th, which would be 20,535. I'm rounding these numbers. Sometimes it's 36 or 37, and I'm just going with the fives and zeros. Of course, with NQ, especially with VIX like this, 2 or 3 points is a millisecond. But let's pull up our levels. On the weekly. See if there's anything we want to add, take away, or what. Okay, so for the bulls, what do I need to see? All right, I think that as long as we can hold over this 18,700, I've really got 18,726 here, but let me look at these highs from last year. 709. So I'm actually going to bring that down just a little bit, but again, even with 20 points with NQ right now, it's not. Okay. So, what do I have? 714 now. All right. Well, as long as we hold 18,700, I think we're okay. You can make there, this kind of was, a bit of a balance here. And the highs from the week of the April 4th, which is 18,600, about another 100 points down. Obviously our operating time frame here is the weekly, so those ranges are going to be lower. But it's not wrong to want to think to put something there, or even here. And that's another 100 points down. The weekly lows from August 12th. And again, these weekly highs from April 14th, which pretty much are equal to the week of March 11th from last year. So it depends how you want to slice it there. I'm going to say under 700 is going to be a warning sign for further sells. Whether it's down to 500, you could see 400, and even down to 18,325 is possible as well to match these lows. So I am going to say, though, as long as that holds, that's going to be definitely key. Ideally, like I said, you want to hold above the 700. But they can still retrace down into these 300s. And as long as it's not broken, then we can still make a case here for the bulls, right? We want to see at least 50% of this candle hold up, right? Anything under that, it's going to be about my threshold. But under that 700, 18,700, I think opens the door for further selling. Again, maybe we stop at 500 in the 400s, but down around 310, under that 300, 310. Well, and I think that really starts to open the door for some more selling and really starts to undo any of this progress that the bulls have made. Like I said, I want to see consolidation like this for the bulls, and then hopefully that's our reaccumulation for the next leg up. Right, where could we go? Probably watching the lows from the week of the March 3rd, coming down around at 18,765 area. So real close to this level right there. Right, we start seeing under 300. Look out below. Okay, but remember, under that 18,700 starts to really open the door for that. All right, let's go into our daily chart. Okay, I'll probably need to add this. I haven't been keeping up with NQ as much. Okay. So here's our operating chart. And from this view, really want to see that 600 hold, 18,600. If not, can come back down to around that 500, but we may break just below it. And coming into 18,480, that's a possibility. Underneath that, 18,400 at the figure, of course, and an 18,384, 380 we'll call it. Breaking under that, well then watch out. Back to 200 and probably 100, right? So right around the 100 is about that 50%, right, of this weekly candle. So I would pay attention to that. Okay. Now we're actually on the daily chart. We're over our 9 here, sitting at 18,658. We'll call it 18,660, and definitely a lot higher than ES. And as I mentioned, I feel like the move in tech has been a little bit more aggressive. Usually is. It seems a bit like making a stronger recovery. Okay. Okay. So here's the 100 that needs to hold. Gotta see, and really ideally, I want to hold the 600 and stay about 200 points. If we can see this, that would be probably good. Need over 18,850 for a chance back. Of course, we have the figure at 1900, but ultimately 19,150, 19,145. I think if we get over 1900, excuse me, that would be very likely. And then any confirmation and acceptance, excuse me, over that 19,150. Well, then 19,283, 300 probably in the works. Then we look to attack the major pivot where we've had issues for the past few sessions last week at 19,400, 19,410 in that area. That's going to be the big spot to see whether we really shift that market structure again, breaking over basically these equal highs, right? But we could potentially just end up even trading like this. This would be probably the most bullish consolidation would be above 18,850, right? This is still fine, but starting to feel a little bit less bullish about it. This is kind of saying, all right, warning. If we start seeing this again and we're hanging out down here, well, that's really starting to break. And again, same thing on ES, right? We have to stay over the highs, right? This is what shifted the market for the last time. Closing over the highs of the 8th and the 7th, basically over 18,400. The high on the 7th was 18,360, and a little bit lower on the 8th. Oh, well, they're actually only 3 points lower, so pretty much actually equal perfectly. As a matter of fact, what I'm going to do in this case is I'm going to move it down. I'm going to move this daily level down. This is going to be so very important. So we'll put this at 58. There we go. So from the daily perspective, we start, or even from the day trading perspective, start seeing under that 18,350. Probably not a good sign. This has to reset though, you know, on this daily, in my opinion. We got to drift this up a little bit more before we can even sustain lower. Right now, still the 20 in the Bears' favor, sitting at 18,150, which is pretty much the high from the 3rd, lining up pretty much right here with my pivot. And the daily 50 sitting up at 20,065. So ways to go for that. I still think that those moving averages, again, need to catch up. All right, now let's look at some day trading levels. Hopefully. Oh, I knew it. All right, previous levels here held up pretty well on Friday. Nailing the low. Came down here. All right, well, I'm going to post these updated. And we're just going to move on from here. I guess I will say the key now is for the bulls to hold 18,450. You know, this could pull back to there. I mean, that's 400 points, but that's going to be key to hold. And really, you know, on the 30-minute, the shift in the market, we'll throw it up here. Boom. So a short-term level there, real quick. 18,675. So, and you could really even probably take it down to the figure 18,600. Hold over that. I think you're okay to try to reach probably for 19,000 would be my guess. Trying to hit this double top buy side equaling those lows here. That would make sense to me. So you know what? Let's just throw it on there. So that's what I would be thinking. And really short term, obviously we just have to get over Friday's highs. Which we were not really able to do. Over 18, let's call it 18,890, 875. Got to get over that. So there you go. A couple of levels there to the upside. Talked about the levels to the downside. Under 1840, 18,460 won't be good. Probably go ahead and retest those lows again. 18,300. 18,269 area. Anything under that sells us back down to these earlier lows at 1850, 1852. Like I said, 2 or 3 points doesn't really do much here on NQ. It's probably a pretty big level. You could see this look above and fail here, and saw a big sell on that break. So I think under that 1850, probably going to lock in some more sellers once again. So that's all I've got for NQ. All right, let's move right along here. Get into some of our other charts. Starting off at the top, peeking in on the yield curve. Still re-steepening. Okay. One day VIX still holding over 49.25. Tried to break, but unless we see it underneath, I mean, you could even say, you know, but definitely spicy here. Starting to turn down in the overbought category, but still flashing 11. Positive 11, however, momentum coming down. So let's see some readings back under 49, and then maybe we can come back to 40 and back down into the 30s here. You got a bit of this gap, so you might look for that to take place. And let's take a look at breadth here. How many stocks in the S&P are trading over their 50 SMA and 200? Okay, I'd like to look at the 50 for a little bit more of that short term. Finally, heading higher. Still in the dumpster, under 50%. Yeah, I mean, you can see these lows here. Oh, well, we got over them. Got over 16%. All right, that's good. All right, so I think maybe, you know, from this side, it's possible. It might not be a straight line, but let's see what happens when we get closer to 25%, 28%. Could just roll over from there. 200, of course, slower moving, but over 23%. Okay, step in the right direction. Same kind of thing. Can we make it up into the 30s? If we do, we might roll over from there. But breadth, overall, still, it's trying, but it doesn't look good, right? It's not over our 50%. Okay, new highs versus new lows. All right, not bad. We were massively extreme levels, extreme readings, I should say. Still not over the zeros, so negative 200, but has improved. Nothing really to report unless it's over zero quite yet. Still not that great. Take a look at junk bonds, see if they're telling us anything yet. Kind of stagnant. All right, no, well, you know what? These ticking down slightly with this up. A little divergent there. Nothing too crazy. VIX futures still in backwardation, I believe. Yes, so risk still off here from this perspective. This one trying to get into contango month versus 9-day, but not quite there yet. The VVIX, volatility of the volatility, need to see it under 139. 139 half. All right, starting to look a bit like a diamond top. See if this starts to get under 139 half. I think that would open the door more for the bulls and take us down potentially into the 120s. So this looks like it wants to come in. Bond ratios. Let's see what's going over in this world. TLT, after falling off a cliff at around our 93 level, well, unless it gets over 87, this is just going to go like this. Back down to 86 to potentially 85, 25. Not the best look there. They're selling it. They're selling it. TNX must be screaming. All right, the spreads here coming down a little bit, but still risk off. Still extremely elevated. But trying to pull back. Corporate bonds coming down. Not the best. See if there are any divergences with our Dow. I don't think so. Dow, a little bit stronger. Not quite in lockstep. Not a huge divergence, but you'd want to see it a little bit closer together. So slightly negative there, but not crazy. Oh God, now here's the talk of the town with the bonds. Oh God, look at this increase in the yields. This is not good. This is, yeah, we're back over 53. We're back over 40 for 4%. We could top here at this 44.8. Head back down, but as long as 44, 43 half holds, it probably would be bouncing. It would just be locking in a lower high. Plenty of room to the upside here. So that's not really what you want to see. The dollar just getting offloaded, coming down to 99. Tried to get back over 125. Dollar's got to get back over 125 for a chance to back at 101, 182. Getting over that, we can see further upside in the dollar. But as it stands, staying under, where did it close? Just under 100. Stay under 100. Stay under 125. 125 cents, I should say. Probably back down to 99.5. Underneath that, we'll go back towards those equal lows at 99. Now, this was one of the things we were talking about, not getting offsides. The put-call ratio was over 1. And this really, was when we're talking about that short squeeze, right? Market very off balance on the short, right? And whenever you get these readings up over 115, I mean, these are extreme. This is really when you want to be a buyer, right? And you just have to hold your nose. Now balancing back out under 89. Now we're back. Bears mostly look like they've gotten short squeezed out of their positions. So now let's see, though, if it stays above 75. But either way, it was a good contrarian signal there to say, hey, they are offsides, and all it's going to take is a little nudge for a big old short squeeze. Oh, sorry, the VIX. Let's do that really quickly. All right, I need to see bulls. Got to see VIX under 36 half, 36, 65, 70. Okay, if you can do that, down to 35, down to 33. Get under that, or really cool down into the 30s. Still, extremely elevated. And if you've looked at any of the options pricing recently, you probably laughed. But since we've been used to trading up in the 50s and the 60s, I'm sure 30 VIX will feel like 15. But either way, under around 33, get some closes under 33, 35. We can see back into the 30s and towards that 28.98, 29 Anything under that, and we'll sell further. On VIX will come down way lower. So let's see what happens there. Definitely, it's not quite as overbought, but this seems like it needs a reset too. So I wouldn't be surprised if we see a little further upside and VIX come down a bit more. Anything on the skew before we close it up? Nope. Long-term puts kind of coming down. So, all right. All right. Well, thank you so much for joining me this week on the analysis and prep. Remember what we say, a prepared trader is a profitable trader. So thank you so much, and thank yourself. Give yourself a pat on the back for taking the time to analyze the market. Hope this helped. Hope that you learned something. Don't forget, again, if you aren't subscribed to the channel, if you please do so. It means so much to me, and it's free. And I will keep putting out more videos for you guys. All right. Well, either way, have a great rest of the weekend. Remember to trade your plan and plan your trades. We'll see you out there in the markets. Take care, trade safe, and be smart. Have a good one.